Talk a little bit about Australia. This is business confidence. Overall, it's around about the long-run average, although it's very varied according to where you are. What our business surveys are basically saying is confidence is roughly okay. We're sort of a little bit below average. So people are scared but not completely scared. In terms of actual activity themselves, if you look at the red line, the blue line is essentially domestic demand, and it's more volatile than our underlying survey. But the red line is sort of saying the economy is slowing. It's saying that domestic demand in a fundamental sense is somewhere around about 3%. So it's saying just at present GDP is probably travelling 2.5 to 2.75%. So that's getting a little bit below average. And what I don't like in that graph is basically that it's starting to come down at present. So it's weakening. And in terms of that, on the left-hand side, new orders, basically below average. And on the right-hand side, and I've had to circle it, capacity utilisation in the economy has dropped significantly. So there's a lot of spare capacity out there, which sort of says to me, you look at trading, you look at profits, and they're coming down. Orders are weak. The labour market's stayed up, but I think there's an adjustment still coming. And so I think the labour market's going to deteriorate a bit. And this is the context that I think you need to think about in terms of what happened to fiscal policy, which is also why I think you're going to have to cut rates. The biggest employer is health. It's added 300,000 jobs, essentially. The other one, there's different sectors there, but if you look at the miners and you look at the bottom at the manufacturers, one of the things you probably haven't been told, certainly if you read the press, is the number of people that have been employed by mining or mining-related services is about the same as the number of people that manufacturers have fired. In terms of currency, what I'm going to say to you, even though the Reserve Bank is essentially cutting rates, one of the big drivers of what's happening to the Australian dollar at present is actually central banks who want to have the Australian dollar as their reserve currency. I wouldn't expect, even if the Reserve Bank cut rates a lot, that we're going to go very much below parity. And that is important because that has dynamics in terms of the multi-speed economy. If you think you're in manufacturing and you need 70 cents to make your system work, then I'm sorry, you've got a problem. So who's doing well? On the left-hand side, the miners are doing very well. On the right-hand side, people who are doing well tend to be in the service sector of the consumer. A lot of people won't believe me when I tell you this, but consumption in Australia, retail, is actually growing at 4%. It's just that they're not spending in discretionary parts of the shops. The ones who are really doing poorly still are basically manufacturers, construction, and retail. So this is actually discretion in the shops. Is this going to change? My answer is I don't see any reason why it is going to change. One of the things that fiscal policy does allow you to do is to try and fix up this sort of problem by spending money in certain areas that are basically struggling. One of the things I didn't see in the budget last night was any attempt to do that.